All right, I got something to say about this mini semiconductor bear market. For the last couple months, Wall Street learned to love to hate the chip stocks. The whole group's down almost 22% from its highs on July 11th, as represented by the SMH. That's a key semiconductor ETF. Many individual names have come down even harder from their highs. Intel is off a staggering 63%. Micron down 45%. AMD's lost almost 40%, just to name the most egregious examples. Now, some of that's simply because the chip stocks got overheated. While the SMH may be down 22% from its highs, it's still up over 25% year-to-date, comfortably outperforming the S&P 500. They rallied too far, too fast, need to come in. On top of that, you've got these pervasive worries about AI spend. For the past few months, we've been hearing that the companies spending fortunes on AI infrastructure simply aren't seeing enough of a return yet, and they might start dialing back their investment at some point. Now, I don't see much evidence of this, though. The bears will point to Nvidia's failure to report a spectacular revenue beat, but that only happened because their new AI chip Blackwell got delayed. They are having trouble producing it at scale. That's totally reasonable. But they've basically solved the problem now. Supply problem, not a demand problem. Demand is off the charts. Finally, you've got people worrying that we're headed into a recession, which could hit all kinds of tech hardware and trickle down to the semis. But the Fed's about to cut interest rates next week. And an easing cycle will bolster the economy. Buy. Plus, this very evening, we got a startlingly a good report from Oracle. And a lot of the good news came in concert with data centers for AI. Hey, not bad. In the end, I think the chip stocks have sold off way too hard. Every reason we had to like this group earlier this year remains intact. The AI spending boom is very real. There's a ton of money being spent to build out the infrastructure, as we heard from Oracle this evening. More important, there's more to chips than AI. For the past couple of quarters, we've been exiting a period of oversupply in the semiconductor market, and we're now finally seeing some excellent sales growth. Yes, we're past the point of equilibrium. We're going up. The semis just had their 4th straight months of sequential sales growth in July. Do you really want to abandon this group just as we're coming out of a supply glut? You should do it when you're going into one. I don't want to go away from this group, which is why I want to give you a shopping list tonight of semiconductor stocks that have been put on sale that I really like. I love the pound the table Nvidia, but I still think we need to wait for the hot money to come out of that one. Too many summer soldiers and sunshine patriots, thank you, Thomas Paine, who need to wave the white flag before the stock can really bottom. I heard it today called no man's land. I like that. Besides, you can find bigger discounts than Nvidia among the other chip makers. First, there's AMD, an on again, off again charitable trust holding. By the way, we'll be talking about it on Thursday at our monthly meeting. And it's now on because we started buying some of it when it sold off in July. AMD actually began its slide in March and is now down close to 40% from its highs. It's the third worst pullback of any chip maker in the S&P 500. Stock's down 26% just from its from the lower high on July 10th, and even after rebounding a few bucks today. Do you know that AMD is down? Do you know it's red for the year? Down for the year. Maybe we came in a little too early for the Charitable Trust, but we've added the position on the way down because it's not like the fundamental story has changed, and that's what we do. While Nvidia is currently unrivaled in the red-hot AI infrastructure space, AMD's in second place. It's not a close second, but there's nobody in third. And they're the only company on Earth that stands a chance of catching up to the not-too-distant future, although everyone's pretty understanding the lead that Nvidia has. Now, AMD's been rolling out their own high-end chips for AI. Demand's terrific. When AMD unveiled the MI300 last December, it projected $2 billion in sales for 2024. In late January, they raised the product sales to $3.5 billion. In late April, they boosted to $4 billion. Most recently, in July, they took it at $4.5 billion. What does the market want, for heaven's sake? Really, AMD's latest quarter was pretty good across the board. Modest sales and earnings beat with better than expected guidance for the current quarter. Stock initially jumped 4% on the news. I thought that was right, but that was right before the yen carry trade imploded and the whole market got obliterated. It's like people just forgot that great quarter ever happened. AMD also gets no respect whatsoever for a couple of smart deals they announced over the summer, picking up ZT Systems and Silo AI, bolstering their cloud and AI software exposure, giving them a large number of engineers. Keep in mind, AMD's number 2 in AI because NVIDIA's a well-developed software ecosystem. But these deals will help them close the gap. That's what they need to do. Finally, you'll hear a lot about how Intel's core business is falling apart. But you almost never hear anyone pointing out that this is fantastic for AMD, their closest competitor in the CPU business. They're taking tons of market share in desktops and servers. Now, AMD is expected to earn $5.45 per share next year, with that number growing to $7.24 per share in 2026. But in a few months, 2026 will be next year. at which point the stock would be selling for less than 20 times next year's earnings? I believe in CEO Lisa Su, and I think AMD is a great buy into weakness, and I've got to tell you, that puts it below a market multiple. That's wrong to me. What else? I'll give you a couple more quick ones, starting with Micron, the market leader in memory chips, with a stock down nearly 50% from its mid-June highs. I'm sorry, I'm pressing the bull button for that one. The core thesis here, the hyperscalers are building all these data centers to power artificial intelligence, and these data centers, well, they need tons of memory, and that's true. Micron's bread and butter. Frankly, this harsh sell-off seems insane to me, given that Micron's business has been accelerating hard over the past 2 quarters, and not just in AI. They delivered a monster sales and earnings beat when they reported in June, while issuing much better than expected guidance for the current quarter. Now, we're going to get these results later this month, but I haven't seen anything that makes me believe that they'll be any worse than the numbers we got in June. That would be unlikely. Micron's now in its 2025 fiscal year, where it's expected to earn $9.59. With the number growing to nearly $13 in the following year. In other words, Micron's trading at less than 7 times next year's fiscal year's earnings estimates. Insanely cheap, but remember, what that often means is people don't believe in the estimates. That's how it gets to 7. I understand that. I think the estimates are okay. Finally, do not forget about ARM Holdings, ARM, the semiconductor design kingpin. That stock has more than doubled since it came public again, roughly a year ago. That's despite pulling back from 188 in early July to 125 today. ARM got a nice boost today on now confirmed reports that its chip designs are being used in the just-launched iPhone 16. That's the processors built on their architecture. That is not a shocker, but some people don't understand that. ARM's unique in that it designs semiconductor architecture, then licenses it out to chip makers and collects royalties on their sales. This gives them a nice predictable revenue stream. Their technology is firmly entrenched in the data center, mobile devices, even the CPU portion of Nvidia's top AI platforms. They'll be big winners from a new smartphone upgrade cycle fueled by all this new AI functionality. There's a reason Apple went with ARM's architecture. They dominate the mobile space. Again, I'd be a buyer into the recent weakness because I think the long-term upside potential is enormous, and I don't mind that it's up that much today. It can go further. Here's the bottom line. It's time to fall back in love, people, with the semiconductors, with some of the most beaten down chip stocks, most certainly. They've been punished enough. And now you are finally getting a chance at discounts to buy AMD, Micron, and ARM Holdings. Mad Money's back after the break.
Coming up, don't be stuck with the market's mood swings. Get ahead of the pack with Off the Charts. Next. Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.